Welcome grade 11s. You are with Ashraf Patel and we are busy with the section on partnerships. Remember, we are looking at the analysis and interpretation of financial statements of a partnership. Okay, so the first indicator that we're going to be looking at today is the amount that is earned by each partner. Once again, the amount that is earned by each partner. Remember, this falls under the category of returns, so the amount that is earned by each partner. And what is this ratio all about? So what are all the entities that would impact on the amount that is earned by each partner? Once again, let me draw your attention to the fact that one needs to know what are we talking about. What is this ratio actually asking us for? So now it is very simple. What does a partner receive? A partner receives a salary, which is in terms of the partnership agreement. The partner would also earn interest on capital. So that's the second component. Then you would find that the partner may earn a bonus. And finally, the partner would earn the share of the profits. So, if we add up all these components, namely salary plus the interest on capital plus the bonus plus the share of profit, that would give you what the partner has earned. Remember, each partner's earnings would be different to the other partner depending on the partnership agreement. Now, there is a slight curveball when it comes to what if the partnership had made a loss. In that case, we would find that you would still have your components, namely your salary plus your interest on capital plus your bonus, but your share of profits. So if there is a loss in the partnership, then partners would now share, and instead of a profit, the partners would share of the losses. In other words, when you are doing your calculation, that would be a negative, indicating to you that you must subtract from the entire permutation. So yes, you would add your salary, you would add your interest on capital, you would add your bonus, but instead of adding the share of profits, in this case here, you would subtract the share of the losses. Okay, and what is important to note, that this gives you an indication of the proportion that the partner is earning. In other words, what are we saying? You would find that partner A would have what partner A has earned, and partner B would have a separate calculation to indicate what partner B has earned. So this is what we refer to as, when we are talking about the amount earned by each partner, this is what we are referring to. The next indicator that we will be discussing is referred to as the percentage return earned by each partner. Okay, now let us look at this indicator. Okay, so in order to do this calculation, you need the amount earned by each partner. Okay, so in order to do this calculation, you need the amount that is earned by each partner over the partner's average equity. So in other words, if we compare this indicator to indicator that we done earlier on in terms of return on average equity, that was done for the business as a whole. In this case here, in a partnership, we will have each partner will also want his personal return on his or her investment. This indicator is based on the same principle as the previous indicator. The difference is that when we are working here, we are working towards each partner's return. Okay, now, when you do this return, obviously, you're going to take the amount. Let's take an example. So if the amount earned by the partner was 210,000 Rand, you would divide it by the partner's average equity. Once again, average equity is your equity at the beginning plus your equity at the end divided by 2. So if we take an amount of 520,000 as the average equity, remember you want a percentage, so you are multiplying it by 100 over 1, and your answer in this case here will be 40.4%. Now remember, with this particular indicator, they may appear to be high in relation to the return earned on other investments. Yes, a return of 40.4% is generally a very high return. However, take into consideration that included in the amount earned by the partner is the partner's salary. If you recall that the partner's salary forms part of the amount that is earned by the partner. And there is a feeling that when you are doing this particular indicator, that the partner salary should not be included in this calculation. However, depending on what the question asks, that is what you will have to do. Okay, grade 11s, if we now have to summarize the section on dealing with returns for partners and dealing with the analysis and interpretation of financial statements, we would say that one is to be able to identify information relevant to the indicator that you are required to calculate. Number 2, once you have identified the information, then you must be able to understand the need to analyze financial statements. Number 3, understand the concepts of markup percentages. Understand when we talk about liquidity, what are we referring to? So these concepts are of paramount importance. Understand when we're talking about internal control, what are we referring to? When we are referring to sustainability, what are we referring to? All of these would form part and parcel of the analysis and interpretation of financial statements. Definitely, having done all of that, one must now be able to use logic and understanding to do your necessary calculations. Once you have done your calculations, one must now be able to do certain comments and recommendations. Remember, you may be asked to do an analysis and interpretation of two separate businesses. For example, business A and business B. You may be asked to do a comparison of these two businesses. So what is important for you to do is to look at the financial indicators and then draw your conclusions based on your comparisons. It is also important that when you are commenting on these, you will talk about the trends. That means what is happening to these indicators. What are they indicating? Was there an increase or was there a decrease? And also, when you are commenting on these, you also have to mention other businesses in the economy compared to the general economy. If you remember, we alluded to this early on in our lessons where we said you have to make your comparisons taking into consideration the general economy of the country. In conclusion, grade 11s, what is important for you to take note of is that one is, having done the calculation, is to be able to make comparisons using that information and also to make certain comments and recommendations. Right, let us take a look at some of the questions. The first question says, what components would fall under the indicator earnings of a partner? That means if you want to do this calculation, what components would you bring in to be able to calculate the earnings of a partner? Number two, when we are talking about the average return for each partner, what would this indicator, what components do you need to bring in to be able to calculate this particular indicator, namely the percentage return earned by each partner? Okay, let us take a look at our answers. Number one, the amount that is earned by each partner, the components are one, the salary of the partner. Number two, the interest on capital. Number three, the bonus. And number four, the share of profits. All of these would be added together to give you what the partner has earned. However, important to note that if the partnership had incurred a loss, then you would again add your salary, you would add your interest on capital, you would add your bonus, so you would have those three components, but now you would bring in the share of the loss, and this would be subtracted from the other components. So please keep this in mind, that you may have a situation where a business or a partnership incurs a loss. In the next question, when we are calculating the return, the average return earned by the partner, what would be our indicator? It would be as follows. The answer to that would be the amount earned by each partner over the partner's average equity multiplied by 100/1. Okay, so I'm sure you are now in a position to be able to analyze the financial statements of a partnership, and more important, you will now be able to comment on these. From me, Ashraf Patel, until the next time, goodbye.